please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, no stopping the Karni Sena. Let's start this show with a quick check on how the markets fared in trade today. Well, to say the least, it was a volatile second half of trade on Dalal Street. The benchmark indices gave up their earlier mega gains, but the Sensex still managed to hold its head above the water. 178 points. It ended in the green. You have that on your screen, the graph. The Nifty, meanwhile, closed above the 10,800 mark for the first time ever and overall ended with gains of 0.25%. Let's talk about the midcaps now. The midcaps, though, underperformed seriously, with the index witnessing the biggest fall that we've seen in the last 4 months. To make sense of this volatile day on Dalal Street, Anuj Singhal joins in to decode all the market action. Anuj, good to have you on the show. So one can say it was perhaps a tale of two halves on Dalal Street today. What do you say?
Well, a tale of two halves today. In the morning, there was euphoria, but by the evening, there was quite a bit of reality check, especially in the mid-caps. The Bank Nifty, of course, opened gap up, 500 points gap up, but could not sustain that, though still ended with about 250-point gains. But the mid-caps tumbled in second half today, especially in last hour, which is quite interesting. In fact, it was only because of select heavyweights that the Nifty managed to close in the green. HDFC Twins in particular, ITC, Kotak, UPL, M&M were the top gainers, so some of these stocks stood out. On the way down, of course, you had big losers like Bharti Infra posted numbers, Adani Ports, commodity stocks like Tata Steel, Hindalco, Ultratech posted numbers, HP and BP, State Bank and Bajaj Finance. Outside the index, a lot of big losers today. Just Dial, Adani Power, India Cements, Nalco, Jain Irrigation, the entire ADAG pack, Reliance Cap, Reliance Infra, Reliance Communications, all of them were down. And some stocks on the way up. Mindtree posted stellar numbers, Group Finance as well, and First Source were a couple of other stocks which looked good. The market's message is clear: buy the dips, but at the time of exuberance, maybe book some profit because the next dip would come. And those who have been buying the dips have been making money.
All right, that was the day as far as Dalal Street goes on. Thanks very much. But let's shift focus to the big event that we are tracking. GST Council's 25th meeting is currently underway in the capital as we speak. And as we've been reporting, now the council has a packed agenda. Sources telling us that earlier today, Nandan Nilekani made a presentation to the council on compliance simplification. But that's not all. That's just one of the things that happened. There's a lot more on the agenda. Timsi Jaipuria, who's been tracking that meeting, joins in to give us the very latest. So, Timsi, what are the key expectations? We understand 70 to 80 items could be considered by the GST Council for a possible rate revision. Throw some more light.
Well, as I speak to you, the GST Council meeting is going on, and two main issues that have come up so far are how to deal with the revenue gap that the states are feeling right now. States have expressed concerns that with the months going by and the revenue collections declining, it is actually impacting the revenue gap that the states themselves are collecting. They wanted an assurance from the government that how will this revenue gap be put in, and they have asked the center that they should come up with a formula, they should come up with a new formula to try and see how the gap over and above the compensation cess can be met. So that is one concern. Secondly, states have submitted their blueprint when it comes to the rollout of interstate e-way bill. A lot of states have already begun the trial run, and a lot of states are yet to join the brigade, so that from 1st Feb it can be a nationwide rollout of interstate e-way bill. Now that's not it. The other areas which are yet to come up for discussion, that is majorly the compliance issue, how to see the compliance burden can be reduced for the taxpayers, either by combining the three forms into one or by simplifying the current procedure, or what could be the best possible mechanism. Also, rate rationalization of about 70 to 80 goods, 30 to 40 services. More than that, not just this rate rationalization, but also how to go forward when it comes to real estate, petroleum, getting these two under the ambit of GST, how to see that government can incentivize digital transactions under the GST regime. So all in, it's a tall agenda for the GST Council, and let's see what actually happens at the end. So what are the concerns that Andhra Pradesh government has cited when it comes to revenue protection? Because as you cited...
we have already said that compensation has to be borne by the government of India. But the council has decided that compensation in view of because the cess will be collected from the states and fund will be created. Out of that fund, compensation will be paid to the states. That is happening now.
So how much is the revenue gap right now that Andhra Pradesh is seeing?
Andhra Pradesh 17% revenue gap is there.
And sir, what about e-way bills?
E-way bill, the discussion is going on in the council.
All right, that meeting is underway, and as we await the outcome of that crucial meeting, sources telling us the GST Council has decided to earmark 35,000 crore rupees of unsettled IGST amount for distribution between centre and states. This has been done on a provisional basis, a point that the Finance Minister of Andhra Pradesh was making to Timsi Jaipuria just a short while back. Latest from the budget corner now, state finance ministers met with Finance Minister Arun Jaitley today to put forward their budget requests. As we had reported yesterday, state finance ministers focused on issues like higher central support for infrastructure and rural spending by the states. Several state finance ministers also sought an increase in cap of 1.5 lakh rupees deduction that is allowed currently under Section 80C of the Income Tax Act. Those were some of the proposal requests, recommendations, call it what you want, from the state finance ministers to Finance Minister Arun Jaitley. And staying with our big budget countdown, here is an exclusive. Despite a cut in India's additional borrowing plan, a fiscal breach is almost certain in FY18. That's the view coming in from Devendra Pant, the chief economist at India Ratings. In a conversation with Sapna Das, Pant said that the ratings agency expects India's fiscal deficit to come in somewhere between 3.46% and 3.5% this fiscal. Remember, earlier the government had earmarked a fiscal deficit of about 3.2%. He added that the government may cite structural reforms escape clause from N.K. Singh's report to justify that fiscal breach. Take a look.
Look, the 3.5% of the GDP numbers is coming from what we can see the slippage on the revenue side. So the first slippage we are seeing in the revenue side, that is not non-tax revenue, the surplus transferred by the RBI to the central government. And then we are looking some shortfall again on the non-tax revenue side, which is the telecom receipts. The third, we are looking at some amount of revenue outgo in the form of GST compensation to the states. Then on the expenditure side, we are looking at supplementary demand for grants.
Two of them have happened.
Two of them has happened. Then we are looking at what is going to happen on the direct tax front, which is giving a big relief, because looking at the April to 15 Jan number, the numbers are really encouraging and must far higher than what the growth assumptions in the last year's budget. Indirect tax front situation is very gray. We don't have a much handle on this, but that is being counted in whatever we are looking at the GST compensation. The third benefit, the another point which is coming in is what we are looking at on the disinvestment front. We already had 54,500 crore. Looking at what the estimates or numbers floating around on HPCL buyout by the ONGC, we are looking at a number somewhere around 35,000 crore. We are looking at a number which is somewhere around 26-27 basis point of the GST.
Budget 2018 is expected to focus on the welfare of farmers and the poor. That's the word coming in from Commerce Minister Suresh Prabhu. In a conversation with Network 18's Maria Shakil, Suresh Prabhu also shared his views on the surge in trade deficit and said the government is working on measures that will help curb India's energy bill and gold imports. Talking about India's plan for the coming up World Economic Forum in Davos, Suresh Prabhu expressed confidence that with Prime Minister Modi's presence being there, that will help in further attracting FDI flows into the country. Take a listen.
The whole world is interested in India. They are all looking up to it. Look at FDI numbers. These are really showing clearly that where the world is heading for. People want to put money into India. We are removing a lot of sectoral caps. We are making sure that the procedural formality that one has to undergo, the foreign investor, is reduced. We are ease of doing business has gone up. This is what the foreign investors look at. Right. We are first time working on ease of trading. They've never done before. So we are actually, my ministry is trying to work on ease of trading, wherein we'll be creating one common platform to ensure that even trading related issues are addressed. At such time, when the global market is growing, Indian market is growing. So Prime Minister Modi going there and speaking to all of them about this great reform that have been done in India, I'm sure investments will follow.
Trade deficit is at a 37 months high. Gold imports are surging. Do these parameters worry you? So,
these are definitely worrying issues. But let us go into the reason for it. Oil prices have shot up for the first time. In the last 3 years, it is the highest now. So obviously, when India imports particular quantity of oil, price goes up, we'll have to pay more. Gold is a similar issue. So we are taking, number one is that we need to take medium-term view. Prime Minister has really gone in for a changing energy profile of India by bringing more renewables, etc. So over a period of time, we don't have to import that much oil. We have energy efficiency law in India, which in fact, when I was a minister, we had piloted that bill in the parliament. So that again will take care of this over a period of time. But short term, this is an issue. Number two, gold. See, we are now trying to find out the gold import will be essentially for re-export and for some domestic consumption. We have already come out, the government has already come out with a scheme called gold bond, etc. to discourage people from using it. But it's a cultural issue. People want to use gold. Particularly, I'm sure you like to also use gold, not me.
As much.
But so therefore, this is a cultural issue. People want to use gold in India.
This will be the first full budget before the 2019 polls. From your vantage point, how do you look at it?
I know about the budget as much as you know. But I can tell you one thing. Knowing our Prime Minister's thrust, all budgets and all public policy, not just budget, all public policies of this government are directed for welfare of the farmers, for betterment of poor people, for ensuring making huge investment into infrastructure, making sure that we become a transparent administration by bringing in new technology like digital technology to improve efficiency and improve productivity and ensure over a period of time that the GDP of India rises for the benefit of people of India.
All right, let's shift focus now to the earnings corner now. India's largest cement company, UltraTech Cement, has reported a mixed set of earnings for the third quarter. On one hand, the company saw a rise in its overall sales volumes, but on the other hand, margins contracted on a yearly basis. Nigel D'Souza, who's been doing all the number crunching for us, joins in with the latest. Nigel, how do you assess the company's performance?
Well, on the whole, UltraTech Cement's numbers were quite disappointing. But let's start with the brightest spot at least. On the top line, there was a beat. Now, we were working with sales volumes growth of around 20 to around 22%. Now, sales volumes jumped up by close to around 37%. But unfortunately, the top line growth is only 35%, telling you that the realizations did decline on a year-on-year basis. And that was a bit disappointing. Not just that, why were the sales volumes higher? Because higher contribution came in from JP Associates acquired plants. Remember, those plants were acquired and now they are consolidating in their books. Remember, in fact, the street was working with JP Associates plants that were acquired. They should function at a capacity utilization levels of around 40 to around 45%. They came in at around 60%. So higher capacity utilization levels from JP Associates, that's what helped the top line, but that's what hurt the profitability as well. And that's why the margins came in at around 16 to around 17%. It did see compression on a year-on-year basis, primarily because of consolidation of JP Associates. Just to give you a couple of numbers, JP Associates, the acquired plants, they used to give an EBITDA per ton of roughly around 400 to around 500 rupees. UltraTech Cement always gave you a EBITDA per ton of around 1,000 rupees. So now with this consolidation, it automatically dilutes the EBITDA per ton. And also remember that in the past quarter, pet coke prices did surge up. And with that, we also had a pet coke ban. So that's what led to the big surge that we're seeing in the power and fuel costs. The profit number as well did see a bit of a decline because finance costs did spike up on the back of this inclusion of JP Associates plants in the consolidated entity. And also the effective tax rate was higher on a year-on-year basis. These numbers, they go down as a disappointment primarily because of the operating performance.
All right, that's as far as UltraTech's performance goes. But what about in the banking space? We have the private sector lender Yes Bank that just reported a largely inline set of earnings for the third quarter. The net profit met the street expectations that came in at 1,077 crores, while the net interest income, or the NII, has jumped 35% on a yearly basis, but has marginally missed what the street was expecting. The net interest margins too have contracted on a quarterly basis. The bank has shown improvement in the asset quality front though. The gross NPAs have contracted by about 10 basis points, while the net NPAs have contracted by about 11 basis points on a quarterly basis. So a CNBC exclusive now, global equity markets are reacting positively to higher growth. That's the word from former RBI Gov Raghuram Rajan. In an exclusive chat with CNBC, Rajan cautioned the market, saying that central banks will be raising interest rates faster than what the markets are expecting. Here's what he said.
You're a central banker. The great unwind is supposedly happening when it comes to the ECB and the U.S. Central Bank. The stock market is completely unconcerned about it. Does that make sense to you?
Well, I think there's good news, which is what the stock market is reacting to. The fact that all the economies are now growing together, which hasn't been there for a long time. And of course, in the US, the tax cut, the corporate tax cut has been useful in terms of corporate profitability and so on. So some of that is a reaction to the good news on that front. But yes, you're right. At some point, the markets also have to recognize the fact that interest rates will slowly start climbing up. Now, the hope is it's going to be gradual, very slowly, that even as the Federal Reserve sort of unwinds its portfolio, the Bank of Japan will continue buying and the ECB will take some time. Now, all this is going to happen. The question is at what pace. If it can happen at a measured pace, the hope is that stock prices and other asset prices, whatever air there is, will leak out very slowly rather than abruptly.
Are you confident that's how it will happen?
If you look at past Federal Reserve tightenings, you realize that with the benefit of hindsight, the market always got it wrong. It was always too complacent about the pace of Federal Reserve tightening. Even if you look at what the dot plots tell us over the next year, they're telling us the Fed is probably thinking, at least at this point, of moving faster than what market upside, in which case they could move faster. I think the Bank of Japan is pretty much on hold, though they also have been making noises about the discomfort they have with extreme monetary easing. President Kuroda made a statement last month, and it is possible they could start looking at this sooner than we think.
Always good to get a view in from Raghuram Rajan. The big national story now, Supreme Court has struck down the ban that was imposed on the Hindi film Padmavat by the 4 states. The CJI-headed Supreme Court bench pulled up the states, namely Gujarat, Haryana, Madhya Pradesh and Rajasthan, for passing orders to ban the film when the Central Board for Film Certification had already given the green light. That's not all. Supreme Court has also restrained other states from passing any such orders. So it's a forward-looking progressive order coming in there from the Chief Justice of India on the Padmavat ban. With that, we got to wrap up this edition of After the Bell, but stay tuned. Up next will be Markets Today. Talk back. It's going to take all the action forward. Don't go anywhere. Goodbye.